I'm currently beating the S&P 500. Watch the whole entire video to find out how I'm actually doing this. But before we get further into this video, I want to actually tell you what the S&P 500 is. The S&P 500 is a collection of about 500 stocks, it could be a little more, that attempt to mirror the whole entire US stock market. Now, to actually get into the S&P 500, there are certain requirements. So not every single stock can just go into the S&P 500. You have to be a certain type of caliber of stock to actually be introduced and maintain the position within it. Some stocks within the S&P hold more weight than others. Like Apple holds a lot more weight over ExxonMobil, for example, or Johnson & Johnson. The S&P 500 is generally the baseline, what everybody looks at to be like, all right, if you weren't invested at all, you're probably below the S&P 500. And if you just attempted to actually invest on your own, were you able to beat the S&P 500? Most people that invest on their own actually fail to beat the S&P 500 on a yearly basis. Fund managers fail to beat the S&P 500 on a yearly basis. So it's kind of a big deal to when you actually beat the S&P 500 every single year over a great period of time. I'm not the only person who's beating the S&P 500, but not a lot of people are actually talking about this. So I just want to share some light that it is possible to beat the S&P 500. You don't gotta put too much effort into stock picking or investing into courses or something like that. I actually want to show you my portfolio real quick. Let's look right into how Robinhood. Robinhood introduced this feature where you could show another stock's graph. What I'm using to show as the S&P 500 on Robinhood is SPY. As you can see over here today, I'm blowing it out of the water by like 30%. 2023 has been a great year for me. Tech stocks have just been booming, and you can see that it just took out the S&P 500 and all its eternity. We can look over the overall time, beat it before, and then over 2022, I've fell below the S&P 500 by almost like 17%. But now we're back up, and we're up by a good amount of margin. So I've done it before. Can I do it every year? Possibly. With enough time in the market, you're able to do this as well. I've beaten the S&P 500 this year. So now it's time for me to show you how I actually did it. I have used 5 different rules to help me in this investing game. And they're quite simple, they're not too hard to wrap your head around. If anything, I would say it's probably some of the simplest ways of investing that you could possibly do besides just investing into this S&P 500. If you're willing to put a little bit more effort than just putting it all into S&P 500, then you might be able to earn a little bit more. But if you're not willing to do a little more, S&P 500 is also an adequate way of earning money. As you know, the S&P 500 is the benchmark of the stock market. So if you are the benchmark, then you can't really be below it. If you are in that minority of people that want to earn more, then I might be able to help you. The first thing that you need to understand is that you need to buy heavily on red days. I know it might be scary to actually buy into something when it's falling down. You might not fully understand the reason why a stock is falling down such a substantial amount, but you have to investigate into that company. You need to take a look into that company and see if anything crucial has changed for the stock price to have changed a substantial amount. For some reason, if the news is freaking out and the company that you're investing into hasn't really changed, then you're good to buy that dip. And depending how big the dip is, it might be worthwhile to actually put a substantial amount of money into it during that period of time. Most people who actually see a dip they're gonna be wanting to sell. They want to get out of that as fast as they possibly can. They don't want to lose any more money, right? But you gotta see this as an opportunity to make money. Usually when I see a 5 to 7% dip into a stock, I look into it, I'm like, okay. I understand it real quick. I'm like, all right, has anything changed fundamentally about the company? If the answer is no, then I see that as a 5 to 7% gain within a couple days, if not a couple months from now. And if it continues to go down, then I might wait a little bit longer to see if it drops a little bit longer. But regardless, I'm gonna keep on investing into it. I'll just dollar cost average into that stock until either the price raises up or the company changes to a way I don't like it and I will have to be forced to sell out of it. But so another thing, to be able to buy heavy on these red days, you're gonna have to be able to stack a little bit of money. You can't be buying every single day. Most of the days, it could be green, could be red, or it could just be completely flat. Most of these times, I'm not really investing. I have money on the sideline. When I see a bloodbath in the market, now it's my time to shine. I'm gonna drop a good portion of money into this day to see how many stocks I can pick up. And those are the most important days in my opinion. The really green days where you're making a lot of money is the outcome of you buying these red days. The thing is, it's kind of opposite, right? Like when people see their stocks going up, they're like, oh, I want to buy, I gotta buy more. That's not the case. You already did your job. You bought it when it was red. Nobody wanted to buy it. Everybody was selling it. You bought it. You held it. Now you're reaping your rewards once it's green day and everybody else is trying to funnel back in it. But the damage is done. The stock is already going up. Like, your opportunity to buy was a couple weeks ago, if that. You gotta be able to understand when a stock is in that period of time as well, where it's just going down for a little bit. Fundamentally, the company has not changed and growth is to come. Secondly, I don't really sell my stock. So another crucial aspect of not really selling stocks, you gotta choose wisely. You can't just go onto any other like Reddit, or you can't just have one of your friends at work tell you about some random stock that you have no idea about and just trust them. You need to do your own work. You got to do your own research into a company, and you have to be willing to understand this company, how they actually make money before you invest into a company. If you do have to invest into a company that you don't fully understand, then the days when they're in the red, you're going to be like, oh man, I messed up. I should have never bought into this company. What am I doing? I got to sell out. But if you actually fundamentally understand what they're doing every day, trying to increase the productivity of that company and increase the profit margins, then you'll understand this is a nice little dip for me to buy in. I don't need to sell out the stock from my portfolio to save myself from a huge loss, because I actually understand the company. Depending on what type of period this will be, right now, stock market is doing pretty good, especially the tech sector. You may not want to buy into it, but especially right now, the tech sector is doing really good. Sometimes, if you really want to get into a sector, you're going to have no choice but to buy. And that's fine. You're going to get in the market somehow. And I'd rather get into the market today than tomorrow. There's a possibility that you could lose money tomorrow just by random luck, honestly. But if you do keep your money in the stock market for a great amount of time and you do choose wisely, then I have no doubt that you will be able to make money on the type of stock that you buy, as long as you understand it, and then you actually see where the company is growing in the next couple of years. Another reason why I don't sell stocks is they're really crucial to my portfolio. And if I were to sell a portion of my stocks for that day and it were to increase, I would just miss out on gains right there. If you keep on missing green days in the market because your money, you just pulled out your money, you just sold, you're gonna have to pay capital gains tax on the stocks that you've sold for a profit. Depending if it was before a year or after year, it could be more or less taxes. Nevertheless, if you miss out on enough green days, you will substantially affect the overall profitability of your brokerage account if you buy in and sell out and you miss green days. Another reason why I have been beating the S&P 500 this year is because I invested heavily into tech stocks. You might be a little bit different, but I believe tech stocks are more valuable than most other stocks, even though other stocks do provide their reasons to invest into, like dividends, or they're just like crucial to the economy. I think tech stocks have the most chance to induce a bunch of change into the economy. If you look into the S&P 500, you can see that most of the top 10 stocks are actually tech stocks. So I'm just kind of beating them in their own game by not investing into too much of the random stocks that they have to invest into to help balance out their portfolio. For me, I don't really care too much about it, since my time in the market is going to be very long. I don't need this money within the immediate future, so I'm just reaping these gains. Let's just go down. Number one, they got Apple, Microsoft, Amazon, Nvidia, Alphabet, Tesla, Meta, Berkshire Hathaway, ExxonMobil, United Health, and that's like pretty much it. So the top 10 right here are pretty much all just tech stocks, besides ExxonMobil and Berkshire Hathaway, but Berkshire Hathaway owns a lot of tech stocks. They're also funneled into a bunch of other stocks as well, as you can see. So some of these names you might recognize, some of them you might not, but nonetheless, I think these tech stocks are the future. And the last thing I want to talk about is having a higher risk tolerance than the average person will allow you to have higher gains. They'll also let you have higher losses depending on what you buy into. So it's important to actually be smart with where you put your money, and you can't necessarily just trust everybody you talk to online. You need to do your own research. You gotta see if you're comfortable investing a certain amount of your own hard-earned money into a stock before you just trust anybody else. But one thing you can do is you can get, like, I guess, referred to a stock by somebody else, and yeah, you just go on from there. If you get referred from a stock, you just take it as face value, like, okay, there's a stock here, maybe it is interesting. Take a look into it, start digging into it, see if it aligns what you want to do later in the future, see if it aligns with what you want to invest into and inside your circle of competence, and you're able to actually understand this company, then it might be worthwhile for you to actually invest into it. That's just an easy way to find stocks, I guess, for people who don't really know where to begin. You could always just look into the S&P 500, I guess. That's where I would go first, because clearly S&P 500 is the benchmark, and if you're investing into a company that's already in here, the chances of a stock in the S&P 500 going to zero is very low, but there's always a possibility. The other way around is also true. The possibility of them going to the moon is also pretty low. Obviously, the more risky you are, the more possibility of you gaining more money in the stock market, but you're also able to lose more. So as you can see, this goes my all-time chart. Over 2022, I was in the red, but due to me just buying the dip and just continue to hold my investments, I was able to push strong through 2023 into what we have right now. So like pretty much the end of 23, it's still above the S&P 500. The question is, are you able to stomach these losses during 2022 while just buying and losing? Like if you look over my previous peak, I was almost at 80K, and at the bottom, I pretty much hit 54. And I didn't sell. I just kept them. I kept all my stocks and just kept on buying. I was like, well, this kind of sucks, but I know this opportunity of buying won't last forever. If for some reason investing into individual stocks is not what you find comfortable, that's fine. That's perfectly fine. But if that's not the case, then I would definitely suggest just investing into an S&P 500 or like Berkshire Hathaway or some type of fund like that, instead of having your funds actively managed by I guess like a professional or something, because you're gonna pay a lot on those fees, and most of the S&P 500 fees or S&P 500 ETF, the fees are a lot lower than what you would have to pay in an actively managed fund by certain companies. In the future, I do think that I'll be able to beat the S&P 500, especially if I'm able to push out a far enough lead. I'm gonna just destroy the S&P 500. I'm not gonna have to be, even if I have a down year, I would still be greatly ahead of the S&P 500 to the point where I can have a down year a couple years in a row and I'll still be fine. I don't plan on having a significant amount of red years, even though most likely will happen. But during those red years, you best believe I'm going to be buying the dip. Hopefully this video was helpful. Let me know if you guys are beating S&P 500 or how you're doing in the stock market in 2023. Hopefully you're doing pretty well. And if you enjoyed this video, like and subscribe.